In this video, we are going to get an introduction to stocks by looking at evaluating a stock. And so I want you to think back at a time where you were at the grocery store and you were trying to evaluate which, you were looking for apples and you tried to evaluate which apple to buy. And the apples seemed to look the same. So you thought that you could just take any one of them. But as you looked deeper, you found out that one of them had a bruise on it, or it may have had a wormhole or something like that in it. Therefore, you evaluated and took the one that did not have those signals on it. So, in a similar way, we can evaluate and decide what stock we want to buy and invest in. In a similar way, we can choose stock A or stock B. We can compare them side by side and see which one we want. So an example of that is comparing Apple and Microsoft. These are both companies that are in the technology sector of the stock market. And so if I wanted to invest in a company stock, and I knew I wanted to get a technology stock, but I didn't know exactly which one to pick, I could compare them. And so similarly here, by using Apple and Microsoft as an example, we're going to go out to the web, to marketwatch.com, and we're going to look at some variables that will help us evaluate a stock. Okay, so here we are. We are on google.com and we can search marketwatch.com and we can go to that site. And this site is going to give us all kinds of information, market news, and so forth. But to find a specific stock, for example, we're going to look at Microsoft. We can go here to where it says search, and it will give us the opportunity to enter a name or a symbol. I can type in Microsoft and hit search. And it will give us the symbol for Microsoft right here. It looks like it brought me to another page here. I'll just go up to search here, Microsoft, and pick Microsoft. And here we go. Okay, so what we have here is information about Microsoft stock, and what I would like to do is go through some of this information, and then what we can do is we can compare it to another stock such as Apple to see which one we may want to purchase. So first of all, up here, the big price right here, we notice it is after hours. That means that the stock market is not open right now at the time of this recording. But if it were to be open, then you would see this number right here changing as it goes throughout the day. And you would see the price go up and down. But it doesn't happen every split second, so it has a little bit of a delay. You also see a few other important factors here, such as the previous close and the change. So that day's change from the previous day's closing price. So it looks like on the 15th of September, Microsoft closed at $57.25. And then on the 16th of September, it closed at $57.31, which is up 6 cents a share, or in other words, 0.1%. We also can see that this range right here is the price during the day of whether the price ended up on a high note or on a low. We also can see that over a 52-week span, whether the price is at the high end of that 52-week span or if it's on the low end of a 52-week span. If you see that a price is on the left, meaning it's closer to the low, that may be a signal of an opportunity to buy. That doesn't mean that you make your purchasing decisions solely on this 52-week low indicator, but that is one variable that you can consider. What we also see here is we have market cap. That stands for market capitalization. Basically what that is the complete overall value of the company within the stock market, and it basically calculated by multiplying the shares that are outstanding for that company by the current share price. Excuse me, the current share price. And so this number right here is $446.12 billion. And so you can compare that with another company to see which company has more market capitalization over the total stock market. The average volume refers to when investors are buying and selling. So if there are a lot of buyers or sellers, then the volume would be really high. If there are very few, then the volume of buyers and sellers would be low. The next item here of a key variable when paying attention to and learning about determining picking a stock to buy is the price to earnings ratio. This ratio right here is equal to the price divided by the earnings per share. And in some respect, this is a way to say how much am I paying in order to receive some earnings off of that stock. So you can see that if this price per earnings ratio is higher for Microsoft than it is for Apple, then the cost for the earnings may be higher for Microsoft. So you might be paying a little bit more in comparison to Apple if you have a higher PE ratio. Another important factor is EPS. EPS stands for earnings per share. The way that we calculate the earnings per share is it's where we take the net income of the company, and that is looked at over the last 4 quarters, and we divide that by the number of shares that are outstanding. So earnings per share is an important factor because it helps us understand the amount of the company's profits that are being divided among each of the shares that are outstanding. And keep in mind that the most common share of stock that is sold is common stocks. So the earnings per share is an important factor also because it helps us understand the profitability of a company. So if you are comparing the earnings per share with one company versus another, you can see which one is potentially more profitable by looking just at the earnings per share. And you can see here there is a stock chart Basically, that's a one-day chart being indicated right here. And what we can do is we can change that to 5 days or 3 months or 6 months, and we can look back at the historical trend of the price of the stock. So if we look at the last 5 years of Microsoft stock, we can see that it has been trending upward, or in a general market term, we call that bullish. You will also find other information on MarketWatch.com. For example, analyst information, such as analyst ratings and their take on whether you should be bullish or bearish. In other words, whether it might be a good idea to buy or sell a particular stock. Let it be important to know that you should never rely on one specific indicator. So you have to take all of these indicators into perspective collectively in evaluating the stability and the value of a stock. Up here you can see a lot of tabs that give you more information about Microsoft, and some of these are, for example, the company profile. This is where you will get even more ratio analysis work on the company. I'm not going to go into all of the details of all of these ratios in this video, but just for a simplistic example, let's just say for liquidity, the liquidity area helps us understand how well the company can take care of its debts. So is it able to pay off its debts that it has quickly? Or if it were to get into financial trouble, would it be able to cover its debts or not? That's just an example. Then we have news information. This is where you can go to find out and follow some of the news on a particular stock. Charts gives you some more interactive capabilities with the actual chart itself. These kinds of charts are typically used by technical analysis traders, and that's basically using charts to find trends and signals that tell you when you may want to buy and sell a stock. Technical analysis on stocks is not a guaranteed win-win situation when buying stocks, so you want to be very careful if you get into technical analysis. The financials is a key piece to evaluating whether you want to buy a stock or not. When we look at the financials statements, this is where we get into what's called fundamental analysis. So there's technical analysis, which is looking at the charts of a stock, and there is fundamental analysis, which is looking at the financial statements of a stock. And you can see here we have income statements, balance sheets, and cash flow statements. However, we don't have the equity statement here, which is the fourth statement in corporate finance. We can, jumping ahead here a little bit, the SEC filings is important as well. When we go to the SEC filings, first, SEC stands for Security and Exchange Commission, which is the regulatory body that oversees the trading of these stocks, and basically companies have to submit their financials information to the SEC so the SEC can evaluate it and audit the statements and see if they are lying about their financial information or not. So what we have here is some of the most important or most common financial statements. For example, the 8K is a financial statement that focuses primarily on specific events that happen within the company. For example, let's say the company is merging with another company, or maybe the board of directors of that company is being revamped or changed. Maybe the company is considering bankruptcy. So there can be some major events that the company is going through, which can have a substantial impact on the price of their stock, which can cause investors to either choose to buy or sell the stock. So the 8K is a form for indicating special events. In fact, it actually says special events right here next to the 8K. That's where you can go to get the form. We also have a 10K form that is submitted to the SEC. A 10K is an annual report of the financial statements to the SEC by the company. And then we also have a 10Q statement. The 10Q is a quarterly financial statements that are sent to the SEC. So let's just do a simple comparison here. So I'm going to go to the overview page for Microsoft. And one of the things that we see is the earnings per share, for example. So that is an indicator of the profitability of the company. And I'm just going to look at that one just for an example here. I'm not going to go through all of the indicators. Well, we'll just use the 52-week high and 52-week low as another example. That's a simple one, really quick here. So we know that the Microsoft is really close to its 52-week high, and it has an earnings per share of 2.05. So if I want to look up Apple, what I can do is I can go up here and I can go search Apple, select Apple, and it will give me Apple's information. So what we see here are just looking at the two variables we were looking at. One was the 52-week high and 52-week low, and the earnings per share. We see that Apple is not quite as high as the 52-week high at Microsoft. And we also see that the earnings per share is a lot higher. It's actually 4 times more, so 4 times as profitable than Microsoft. So that is a simple way of seeing a few things. And if we want to get into more details, we can go to the financial statements and we can look at each of the financial statements and compare them. So with that being said, that is an introduction to the valuation or evaluating and being able to compare stocks and choosing which ones to buy. However, I will make one important point, and that is the importance of diversification. And basically, diversification is the idea of not buying only one stock, or maybe even 1 or 2 or 3 stocks, but buying a lot of different stocks, so that you reduce the risk that you take with the investment. And basically, there is a way that you can invest in these things over time. If you are uncertain to knowing how to or when to buy a stock and when not to buy a stock, you can do what's called dollar cost averaging. I'm just going to go to the main page of Apple here. It doesn't talk about dollar cost averaging, but dollar cost averaging is the idea of putting a specific amount of money into an investment at the same time over a period of time. For example, every month. So dollar cost averaging, an example of that is putting $500 into Apple stock, or putting $250 into Apple stock and $250 into Microsoft stock on the first of every month. And that way you diversify a little bit, and you don't have to try and time the market, because generally speaking, the overall market, when we look at it, for example, we have the major indexes up here, the Dow Jones, we have the S&P 500 index, and we have the NASDAQ index, the three most popular indexes in the United States. We have these, and for example, if I go to the S&P 500 and I look at the trend of that over the last 2 years, I can see that generally speaking, it has gone upward generally. So what that means is, if you dollar cost average over time, over a long period of time, this is just giving me 2 years. I could go out longer. In fact, I'll just do this. Click on S&P 500, and I will go to 5 years. And here's a better picture of seeing the long-term trend of the S&P 500. So what that means is, if I dollar cost average, that means I'm buying in all along the way. Therefore, I'm purchasing along the whole time frame, a little bit at a time, and over time it builds up as the price is going up. That's the idea of dollar cost averaging. And this concludes the video on introduction to stocks, looking at the basics of evaluating a stock.